Hey, this is Matt from InvestiQuant. Today is Thursday, November 5th, 2020, and today seems like what may be one of the most overlooked FOMC announcements I can remember, but it is FOMC announcement day. It's on a Thursday today. It is normally on a Wednesday, but we are having it today after the election while we still wait for official election results, which are still impacting the market heavily. But I figured we'd take a look at it anyway, even though it may not be the main focus of trading today. It is still something that is always important to the markets. So let's take a look at FOMC announcement day in all four instruments this morning. We'll be looking at an entry based upon getting long at the open and exiting at the close. For opening filters, we are up a strong amount this morning at the time of this recording. I'm going to assume we're going to stay up as a gap up this morning. This, I will tell you, is something that does have a bit of an impact on this study, exactly where we open. I'm keeping it a little bit more generic here for simply just gapping up, but you probably want to come in here and look at different locations, different sizes of gaps this morning, because that can have an impact. Typically, the smaller gaps are a little bit more bearish on this pattern, but we're going to be looking at all up gaps together here as we build this out. For indicators, I'm going to hop into here and put us in a similar market environment of above a 10 and above a 200-day simple moving average. And then I'm going to go into market events, and I'm going to hit that it is FOMC announcement day and hit view results. And here we go. So these are the results of going long at the open, 9:30 a.m. Eastern Time, exiting at the close, 4:15 p.m. Eastern Time, when you gap up on FOMC announcement day in this bullish environment. Historically, we've got 42 samples of this happening in the S&P, 47 in the NASDAQ, 37 in the Dow, and 37 in the Russell. And if we look at the win rates on these, it's noticeable that the S&P is significantly weaker than the others. So S&P coming in at 31% win rate. So a majority of these days have had a red candlestick forming on the daily charts at the end of the day, whereas the NASDAQ is about 51%. So that's kind of neutral there, as is the Dow at 46% and the Russell at 49%. Those three are a bit more neutral, but for whatever reason, the S&P has been weaker on this day than the other markets when in a similar environment. If we take a look at average win, average loss is smaller than the average loss in the S&P. They're not that different in the NASDAQ. The NASDAQ, the average loss is a little bit bigger. Average loss is a little bit bigger in the Dow, and the average loss is quite a bit bigger than the average win in the Russell. So average loss size is larger on all four. Some of them not as big of a difference as others. And win rates are neutral to weak as a group. And you know, I did look at different opening locations. As I said earlier, that does make a difference on this pattern. Typically, the smaller the up gap, the weaker the bias. Also, I looked at trying to add some more context around this crazy rally that we've been having here, and things like 2% up day the day before FOMC announcement, all kinds of different ways to describe this type of rally, and it is extremely rare. Some of these things have never happened, at least not dating back to 2003. So that's why we're not looking at additional context today, because this rally has just not been anything like we've seen here in recent history. So hopefully you found this helpful. Good luck today, and I will see you next time.